Good morning, OptionStrat traders. Steve Ganz here, and I want to follow up. It's a little noisy out here. I'm out in the backyard this morning on Memorial Day with the crows. Anyhow, I wanted to follow up on the NVDA trade. So as you recall, last week, let's see here. Here we go. Last week, I did a calendar in NVDA. Now, I've had people ask me, well, what do you do now? As we know, NVIDIA ripped up a massive amount. I mean, it went from $300 to $300 and around $390. Now, we had a max loss in this trade of around $200. Well, we're kind of experiencing that max loss right now. So how did that happen? Well, first of all, we sold this 300 put that expired last Friday, but that expired at full profit. So we took in $1,057 on that trade. However, we also then had paid $1,225 for this one. The difference, of course, between those two is going to be our current loss in the trade. Now, this has not fully expired. Our long put has not fully expired yet, but it will by this weekend. And again, we'll be down that amount. We're all the way up here. This thing's all the way down here. So what can we do with this, if anything? I'm going to show you there is a way to battle this. I'm not recommending battling it. In most cases, I would just take the $168 loss and move on. But if somebody wanted to do battle with this, you could take a look at a chart, and let's just say you look at a chart and you have an opinion that NVIDIA is likely not to go above 410, for example, at this point. I'm not saying that's the case. I'm just saying if someone were to look at a chart and think that would be the case for the rest of this next week, a person could come in at this same expiration and you could sell a call spread. So we could sell a call at, and I'm just going to say 410. Then we could also, just to protect ourselves and not have an unexposed option, we could buy a call at, say, 420. That would bring in enough money that we could reduce our loss in this trade down to only a $48 loss. Now, what if we wanted to try to get this trade into a profitable area? Well, we could do one more thing. We could sell a put against this long put that we already have. So I come in here and let's just sell a put, and we'd have to pick where we wanted to put that put. Now, we have to keep in mind here that we don't want to open up a massive amount of additional risk. But again, let's just say, for example, that you might have an opinion that after this huge jump in NVIDIA and the fact that it's currently trading around 390, that during this week you might not expect it to drop below, 370 or 360 or whatever point. You could come in and sell that put. Now you have a call spread on the upside that you've taken in some money for. You have sold this put for $1.04. We still have this long put in place, which is protecting our downside risk, although it is quite a ways away. So if during this next week NVIDIA were to range between 360 and 410, that's a pretty darn wide range, particularly after the big move has likely taken place. This thing can decay and end up with a $50, $60 profit. Again, I am not recommending anything like this. This is strictly designed to show in a paper trade what moves could be available to someone if they wanted to try to manage a position. So that question came in from a number of people that saw the original video where we did this, and they're asking, so what now? So I felt it was important to show them what now as a possibility. And there could certainly be other possibilities out there, but that's how I teach my students in large part to handle calendars. I will also say one other thing that would have helped in this situation, and I actually did trade NVIDIA, and I traded a trade like this, but I put my June expiration quite a ways out in time. It wasn't June 2nd. I put my long out at about June 17th. That allows me then more ability to do something like this, because if I were selling this option right now on 6/2, I could pick up $1.04 for that. But if I were to go out and change that expiration to be the June 16th, I can pick up $5.80 for that. So because my long option in my personal trade was much further out in time, I have much more ability to manage this and bring in additional money on all three of these strikes. So that is something that I commonly do when I do earnings trades. If I do a calendar, I try to spread them apart quite a ways. So hopefully this is helpful, and I will probably put out the compare and contrast video a little later in the week. Normally I do those on Tuesdays, but I felt it was important to get this one out because of the timing of it expiring this coming Friday. So it may be Wednesday or so before I put out the compare and contrast this week. So have a great Memorial Day, everyone. Those of you that are veterans, first responders, etc., thank you so much. And that's it from Steve today. Take care.